Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 25th of September 2022, and as is always the case with these events, we're going to talk about whatever the audience wants to talk about. These sessions are open to novices and experts alike, and so sometimes we have some basic questions where people are asking really simple things about getting into crypto and what an NFT is. And other weeks we have our experts who join us who talk about some of the projects that they're working on that may be of interest. If you'd like to join a future session, we record these live every Sunday evening, UK 7 p.m. BST at the moment. It'll soon be changing to GMT. And you can find a link to join the meetings in the comments below. If you enjoy what you see today, please do click on the subscribe, click on the like, make comments in the YouTube thing. Or even better, as I say, do come along to a future session. So with that, let's see who's going to come and join us today. Hey, Eric, thanks for joining us today.
Hey, how are you?
Hey, I am good, thank you. Got Yazir join us as well. Hey, Yazir.
Hey, yeah, how are we doing? Sorry, I'm just taking time getting off mute. How are we doing?
Hey, we're good, thanks. I saw your camera briefly come on and then flick off, so yeah, that's not a problem. And we've got someone else who's joining us as well. It says he's football fan.
Hello, football fan.
So sorry. I've been speaking to myself. Didn't realize I was on mute. Hello, Gary. Hello, Eric, Nicola, and Yasser. I think Gary, you forgot we met at CTM birthday bash earlier this year.
Ah, yes, yeah. I haven't forgot. It's just that I can never remember people's pseudo-names and their real names and everything.
Oh, yeah. That's sorry, because I use Zoom a lot for my conference calls and all. So I can change the name if you want. That makes it easier.
That'd be great. Because I find as I get older, I'm still really, really good at remembering names. I'm great at remembering faces. I'm just awful at putting them together.
Okay. That's fine.
Hey, and talking of names and faces, Nicola's joined us as well. Hey there, Nicola.
Hello, nice to meet you.
Hey.
Welcome.
So lots of new faces on today. This is brilliant. And this is quite often how it works out on these sessions, that we sometimes have a couple of regulars who join us. We get people who come along for 1 week and die away. We get loads of people who say, oh, yeah, I'll see you next week. And then you never do. So I presume there are certain agencies taking them off the world type thing. So it's kind of the way it works. And that's why I have to be a little bit careful about what I say on this. Because as I say to people, that this is recorded, we stick it up on YouTube afterwards, and I get loads of people. I've actually had people at conferences walk up to me and say, "Oh yeah, I can never make it to your events, but I watch the recordings each week. It's brilliant. Keep going." So that's great. So we'll start from backwards then. Nicola, tell us a little bit more about why you're here today and what your interest is.
Well, I'm trying to find people besides Facebook who are involved in crypto.
Mm-hmm.
There's a lot of nonsense on Facebook groups, a lot of scamming and useless nonsense, that people talking about trading and they don't know what they're talking about.
Yep.
I'm actually a Forex trader. I have been for the last nearly 3 years now, actually. And then I also do soft mining. Well, soft is the wrong word. It's more hands-off mining as well. And I've been in crypto now for about 6 months. I guess it's a natural progression. Yeah. If you're a currency trader, you kind of fall into it. So
yeah.
So I started using my my trading style on crypto just to see how it ticked, So basically my strategy at the moment is I pretty much buy and hold crypto, and it's long term, as you guys probably all know. And I don't know if I will trade it. I'm still much more comfortable in currency trading. But I'm here today because I just wanted to meet more people that crypto trade, because I'm sick to death of finding people that are just join this site and I'll turn 100 into 1,000.
Yeah. The usual one. The good thing at the moment is that the market is in a bit of a, it's in a bit of a depression, which is great, because it makes a load of the trading people go away. Whenever the market's rising, you get these people who think they're incredible experts and experienced traders. It's like, No, the tide's rising, your boat's going up. That's just a pure coincidence.
But,
Yeah.
but at the same time, Gary and Nicola, for seasoned traders, they are all waiting for the dip. As soon as the dip arrives, they all jump in because nobody wants to buy when it's at the peak.
See, I'm still buying. I have a monthly strategy. I do buy. I follow dollar cost averaging. My with Bitcoin, my well, you probably all have the same strategy. It's still bearish. And it will continue to be, and I have my targets baked in there. But so I still follow every month. I will purchase Bitcoin and ETH, and then because I do hands-off mining, I'm mining currency there too. So that's what I do on a daily basis.
That's going to be interesting. Someone did a really good tweet the other day where they took a look at Bitcoin and dollar cost averaging over, I think it's last 4 years, and that they basically said, I can't remember the actual numbers, but I remember the sentiments that if they'd have simply put $10,000 in, I think it was 3 years ago, that they'd now be $100 up or something. If they put the money in and then dollar cost averaged, they'd be about 30% down. So this is kind of interesting. So I'm going to go and do some analysis this week because I've never been a fan of dollar cost averaging in crypto because crypto isn't fundamentally in dollars.
True.
Go on, Amit.
Sorry, a question came to me. What's dollar cost averaging, by the way?
So go on then, Nicola. You're doing it. Explain to Amit.
Every month, it's what I do is every month I buy a certain amount of Bitcoin, and the goal is to always buy the lower price, or always buy the lower price of the cost of your Bitcoin, and then sometimes you might buy slightly higher, but the goal is always to purchase lower, and then over the course of the year you get this average.
Okay, I get it.
That's the way I
can add something.
Go on, Erick.
Add something to that thought. If you have $100, if that's the size of your portfolio to commit to crypto, and you do it all at once, then what happens is, because the price isn't never static, then it's going to either go up or go down. If it goes up, you're happy, right? But if it goes down, then you say, oh, I shouldn't have put everything in. I should have put in some part and then picked up some more on the downside, right? So by dollar cost averaging, if you were to take your $100 and split it into $20 commitments, you make the first commitment is only $20, and then you kind of watch where it goes, right? And there's a time period perhaps that you can say, I'm going to do this every month, or I'm going to do this every quarter, or whatever the thing is, or I'm just going to do it at random points. So I'm just going to watch it, right? Then it goes down, you pick up some more. Then you think, oh, that was a great opportunity, right? Then it goes up. So you just sort of sit there and you now have a lower cost basis. If it goes, and then you hope that it'll hit that low point again. So if it does, you still got money left in the pocket, right? So you keep buying. And so the system works in both directions. When it goes down, you buy some more because you're still sitting on cash. When it goes up, you take some profits and you go, okay, it's gone up enough, and I'm in a profit, and I know it'll go down. But you don't sell everything, right? Because if you sell everything and you're wrong, and it goes even higher, you go, oh gosh, I sold everything and I shouldn't have. But you sold a little bit, so you took some profits. That's good, and you're still carrying a position so that you still see the upside, right? Mm-hmm. So basically, what dollar cost averaging does is it just it spreads your capacity to enter and exit a market on a much broader range, right? Depending on your parameters.
It is interesting. I've seen dollar cost averaging used in two ways. The one way is simply whenever the price is going down, put more in, because if you thought it was worth $60,000 when you bought in, then it's definitely worth $40,000, and it's absolutely worth $20,000, and it's an absolute bargain at $10,000. That works in traditional shares and FX trading and that kind of thing, because they don't typically end up at zero. And the one thing that a lot of people who've come in from traditional financial services and have come into crypto don't get is that crypto can go to zero. and some of them do. You know, Bitcoin, very unlikely it will. This is where a big banner comes up with me saying, this is not to be considered as financial, legal, or taxation advice. But Bitcoin's pretty unlikely to. The risk is that with some cryptos, and I've seen this with some of the ICOs and some of the tokens that have launched, people have gone, oh, you know, I saw it rocket up at launch, but it's gone down now, so I'll buy the dip. And they buy and they buy and they buy and it hits zero and it smacks into the ground. So that doesn't always work. The other
I want to argue that point, but go on.
The other form of dollar cost averaging that people call dollar cost averaging, but which isn't, it is what I would describe as the safer way. And this is what I do actually recommend to some people, nobody on this call or nobody on this recording, obviously. And that's simply that if you normally go to Starbucks each day and you have a cup of coffee, and it's a $3 cup of coffee or a £3 cup of coffee, stop buying your coffee. And then every week of the £21 that you've just saved, stick £20 of it away. And then once a month, buy some crypto, right? And then if it ends up at zero, you've not lost anything. You've just wasted a few cups of coffee that you didn't have. Whereas if it goes up and it hits the moon, blah, 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 then you're nicely in. Yazir, you've got your hand up for something.
Yeah, I was just going to say, from a dollar cost averaging point of view, and you know, we're talking about traditional finance. What I would say is for Ethereum, because there's a lot of value logged in Ethereum in millions of dollars, it's a safer bet compared to the other cryptocurrencies. It's like, you know, buying an ETF, because ERC20 is industry standard where you have, you know, your NFTs are on there, your other tokens and projects are building on that. So if you hold ETH, I think in grand scheme of things, if you look at projects that have come on since 2017, 2016, when Ethereum came on and did the, you know, whole smart contract thing, we've had blockchains like Neo, we have had blockchains, you know, so many blockchains have come and died basically. But Ethereum has always been there. And any new album that's come about in the last few years, they've always said, you know, this is the next Ethereum killer. So, you know, buying Ethereum and Bitcoin amongst all the noise that cryptocurrencies, you know, doing, I think you're right. Dollar cost averaging is a it's a tricky one, especially in blockchain and crypto. And you've got to know the project. So for example, we have a token in the market, which is a KTX token. Now, someone who doesn't know KTX will be, you know, maybe they buy it, they won't buy it, they'll think it's you know, it's a scam token. But the project itself, you've got to understand the project. And some of the people that have tokens in the market, I know the projects personally. I know the founders of those projects, and that's why I hold them, because I know there's development work going on. I know they have a longer term plan. And crypto, just like any other startup world, it takes between 3 to 5 years for a company, for a product, for a project to, you know, find their feet and find the ground and find some roots, and, you know, for the roots to go deeper. And I think with the whole noise in crypto space, majority of the projects not afforded that. And then there's a lot of FUD around it, and that's part of the reason they die. And part of the reason is basically, you know, people want quick money. They you know, like Luna collapsed because of this reason. And there are a lot of scams in there. So whilst dollar cost averaging makes sense in traditional market, it also makes sense in the crypto market, but you have to be really, 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 really careful on what projects you're investing in. And if you don't do your due diligence, you know, regardless of where you invest in, whether it's stocks, traditional market or crypto market, you will get burned regardless.
I'll just offer the general thing of caution with it, really. I keep hearing things about, you know, this market is more heavily invested in, you know, and Ethereum's the good one, because if you look at the market space at the moment, I think Bitcoin is at 46% of the market and Ethereum 17% in terms of market share and that. But I keep urging people to realize nobody has got anything invested in Ethereum in the same way that when you buy a can of Coke, you are not invested in Coca-Cola. So, you know, just bear that in mind, really. And so I have lots of conversations. Quite often I have conversations on Facebook, as Nicola says, there's people who are very opinionated on there who don't always know necessarily the background on that. and they'll go on and on about how much they've invested in something. It's like, no, you've bought a load of something. That does not mean you're invested in it. Eric, were you putting your hand up to that? Or is it just that you're eating something?
I actually wanted to go back to a previous point that you made and challenge it. You said that there's a distinction between the equity markets and crypto, let's say, where crypto could go to zero, but the equity markets wouldn't, right? And I actually wrote a whole article on this subject called "Why the Crypto Markets Aren't Crashing." That takes up the opposite perspective. And here's how I see this, right? I used to be heavily involved in the traditional markets. I was in equities. I did a lot of options trading. I was in gold and precious metals, all kinds of things. And there are two kind of different approaches to how to manage money on the traditional markets. One is by the light of fundamentals. You look at a company and you say, well, you know, the Q ratios and the cash reserves and, you know, and what's management doing? Is it good management? Do they have good market prospects? All these kinds of things, right? And so is there a correlation between that sort of human activity to actual price? The answer is yes. There is a PE ratio, right? There's a price to earnings ratio. What is the company earning? What is the profitability of the company, et cetera? The other approach is basically stochastics or technical analysis, I guess you could call. So you say, okay, I don't really care that there's a company underneath it. I don't care about the management. I don't care about the consumers and the marketplace. All I know is I've got this chart and it's doing the following, right? And my particular journey was, I started with fundamentals and I did very badly. And the reason I came to understand is that basically the market is deeply corrupt. The CEOs, they steal the money. The accountants cook the books. Everybody lies about everything, right? They lie about how much product they sold. They sell shit product that they know is going to return, but they want those quarter numbers. And so you're looking at a bunch of disinformation. And I thought, okay, fine. So fundamental investing, fundamentally makes sense. But in the current expression of the market, it doesn't make sense at all. So then I went to trading, to technical analysis, and I spent a lot of time with Fibonacci retracements and Elliott wave theory and all of the moving averages and exponential moving averages, all this kind of stuff, the Bollinger Bands. And at the end of the day, I did terribly as well, right? Because the reality there is that we can never know the future. Mm-hmm. And so even though we can create positions that immunize us from certain kinds of movements, all we do is we it's like squeezing a balloon, right? Yeah, you got these 2 points closer, but now you've got this bulge over here of exposure to something, right? And so I did phenomenally well with sugar and orange juice and stuff, and lost it all in aluminum, right? For example. So with crypto, so here's one of the points that I wanted to make. One of the most terrible decisions I made was I was invested in this company called USTX, and they were basically a software as a service company, and they were probably one of the first, right? And I looked at it and I said, that makes total sense. That it was a precursor to the cloud, basically. And I love this company, and I bought it at $70. And when it hit 50, I was delighted. I bought more, right? And when it hit 20, I was like, oh my God, this is the opportunity of a lifetime. If you look at the fundamentals, they haven't changed. Management is still the same. The potential is still the same. It's just a cheaper stock, and I love it, right? But what was really happening was that there was an overall downshift in the market, right? And if in fact the sector got destroyed, and because of the dynamics of stock issuance and the relationship to price of the stock and all this kind of stuff, this created a reaction that ultimately made the company go bankrupt. So I think I still even bought some shares at like $5, and then it delisted on me. Like it stopped trading. And I'm now holding on to all these shares, but there is no company left.
Yep.
Right. And so that actually went to zero, because when the company goes bankrupt, those shares cease to exist. Right. And that is the difference between crypto and equities and all these other kinds of things. Bonds, the bondholders can, the issuers can default, right? Commodities, they get spoiled and they disappear. Equities obviously can disappear, but crypto never disappears. Bitcoin could go down to zero, and I will still have my Bitcoin, right? And it's just a matter of time before.
Correct. That's not correct, though.
Well, you would have to destroy the mining mechanisms, right?
Yeah.
And that, as long as there is a financial incentive for miners to continue mining, there will be a cost basis for Bitcoin just the same as there is in gold. Yeah. So what happens is if the price of gold falls below the cost of mining, people stop mining, right? Same with Bitcoin, except that Bitcoin has a variable, an adjustable mechanism to lower the cost of Bitcoin. So Bitcoin will always be profitable. And as long as it is, it'll always be worth something.
So I'm going to quickly caveat what we're saying, because I'll still hold that for the majority of times, a company has an intrinsic value. So even when it closes down, as you say, though, it can become insolvent, that kind of thing. So it doesn't work. So that kind of occasional thing. With the exception of the biggies like Bitcoin, most of the other cryptocurrencies can simply stop, and the Bitcoin and the proof of work or proof of stake or whatever that is running it can just get switched off. If that blockchain becomes deactivated, all you've got is the private keys to something that isn't running anymore. But I think it's actually worth having a further conversation on that a bit deeper. But I wanted to introduce, I just noticed there's a few other people who've come on. We've got Elena, who's one of our regulars and always welcome. I see we've been joined by Alex, by Jimmy, by Elena, by the look of it, and Shafran as well. Did I pronounce your name right, Shafran? You smiled a little bit there. Come and say hi and tell me how to spell your pronounce properly.
Hi, sorry, I didn't realize I was muted. This is my first time here. I've invested in crypto about a year ago, possibly like when it was at its all-time high. But I've managed to keep my portfolio stable so far. But I'm just trying to get back to it because I had like a big break with like work and so on and my personal life. So that's it.
Well, if you've kept it stable, that's a major achievement in its own right.
Yeah.
And we're joined by Jimmy in San Francisco. How's it going, James? And we get to say, how on earth can we get away with saying you're on mute in 2022?
I know. I should have realised, shouldn't I? Yeah. No, definitely not San Francisco. More like Bracknell. But yeah, no, all these really, really good and great to see you all. Fantastic. Yeah, fantastic talk crypto as always, and just learning loads. So thanks all.
Cool, excellent. Alex, do you want to say hi?
Yeah, hi everyone. First time for me. I'm interested in crypto, sort of started quite late, so here to learn. So thank you very much for doing this, for sharing a bit of knowledge.
A pleasure. And for most people who are on here, I think most people, I mean, Elena's one of my regulars. James is an itinerant visitor who's not been around for a while. Most people are new to this, so it's really not a problem. Don't worry at all. And is it Elena who's joining us as well, who's showing their Gmail account, which is an interesting security risk? Are they going to come off mute? No, they're not. They're frantically now trying to work out what I mean by showing your email address being a security risk, and then they'll worry about whether being on mute is a problem or not. So okay, folks.
That's the thing, because this is. I mean, I'm here for the first time, and I'm meeting except Gary, I'm meeting everyone for the first time. So it's always good to turn your cameras on to just say, hello.
Yeah, absolutely.
And I don't know where people are based. So I know James said he's in Bracknell. I'm in London. So where are you, Shafran, from?
I am in Trowbridge, which is near Bristol.
Okay. All right.
Yeah.
Okay.
I'm originally from Bangladesh.
Bangladesh.
I'm originally from Bangladesh.
Okay, cool. Anyone else living anywhere exotic or exotic origins? Nicola, you're smiling.
Devon.
Devon, my word.
As my parents say to me, because my parents just retired, they moved up to Scotland, and they said I live in the tropics. I'm good with that.
Well, Nicola, thanks very much for joining us from the 20th century, which is basically Devon and the Isle of Wight, I think. So we've got a mix of people from a mixture of places and everything. And if people want to butt in at whatever point, say where they're from or anything, that's fantastic. Amit, though, I wanted to turn to you because you and I have interacted a few times, as you say, on Telegram, this kind of thing. You're part of the London scene. Share with everybody what you're up to.
Yeah, 100%. And thanks for the invitation. And one good thing that you did, Gary, today was you sent a reminder on those WhatsApp group that we are part of. Mm-hmm. So I was free today, and I said, okay, let me go and join. So my name is Amit, and I'm the founder of Football Fan app and FanCoin. So what Football Fan app does is it's a Web 3.0 app for fans of football, where it's mainly a social media app where fans come and post their content. That content can vary from a podcast to a video to a photo to a normal text. They can create their own chat room. So it's a user-generated application, content application, where they collect FanCoin as a reward from us for every activity that they do on the app. And the main idea behind Football Fan app was to, so football, as you know, is the biggest entertainment in the world. I call it as an entertainment. Some people might call it as a sport, but it's an entertainment at the end of the day. It's one of the biggest entertainment in the world. Nothing like films or music or any other sport comes closer to it. And it's a 12-month sport. And even if there are no games happening, there is some other action that happens. And as most of us know, the fans are very passionate. They like to express themselves. They like to share their good days as well as bad days with everyone else. And when they go on to traditional social media platforms, they either get banned for speaking their mind out, or they are trolled. So what we started with was that it's a freedom of speech platform. You can come and talk whatever shit you want to talk and express yourself, your happiness, your frustrations and everything. And we will reward for every effort that you're taking. Because when you post your content on Instagram or on YouTube or on Facebook or anywhere else, you don't get rewarded for that. Unless you are a top YouTuber, for example. If you are one of those millions of people who are there on YouTube who has less than 1,000 subscribers, have less than X number of hours of viewing on your content and no strikes on your content, you don't get paid by YouTube. But YouTube runs ads on your platform. Mm-hmm. They make a lot of money. They exploit the most out of your content. Even with the top YouTubers that they work with, YouTube is the one who exploits their content, their efforts more than the content creators themselves. So that's the whole idea how we started on the Football Fan app journey. This was the concept that I wrote down in May of 2017. And then we founded the company in April of 2019. We raised some pre-seed money to build the product. We launched the product in June 2020 during pandemic, which a lot of people they find it tough to do things during that time. But since it was football, Euros was supposed to happen in England after 1996. We said we'll just carry on and we'll just launch the product then. But Euros happened next year. And then last year we did the crowdfunding round on Crowdcube, and we were overfunded by 314% over there. Nearly 500 investors invested in us from all over the world. And that gave us more confidence that what our ideas, concepts were, they are actually loved by several people around the world. People invested in us from Africa, from South America, from Middle East, from Europe, from Hong Kong, Singapore, from India, from all over the places. In fact, people from US and Canada, they approached us asking us how can they invest in us, because Crowdcube doesn't allow any Canadian or American citizens to invest via their platform. But we had no choice at that point of time. So then we always had this concept of fan coin from day one. So the users were collecting their fan coins when they were posting content, engaging on the platform, etc., etc. We have so far distributed nearly 1 million fan coins to our user base. Our community has grown to 200,000 user base, who has generated over 29 million active engagements on the app. We created our own NFT platform where users can convert their content into NFTs and trade it on our platform. So, and the way we did it is that we took inspiration again from, we try to simplify things. So we took inspiration from Amazon, for example. So when you buy a pair of socks, you don't think about how those socks are delivered to you. You just say, okay, I need a pair of socks. Here is my payment, and deliver it to me. You don't care about whether it is delivered by cloud computing or there's some supply chain happening behind it or whatnot. That's what we did with NFTs on our platforms. You don't have to worry about having a wallet. You don't need to worry about linking a wallet to something else. You don't need to worry about having cryptocurrencies in the wallet. All you do is when you are uploading your content, you select an option whether you want to convert it into NFT or not. And you press a button, and we do all the bulk of the work behind the scenes. And within less than 60 seconds, the NFT is created and is there on blockchain, and it is available on the platform to trade. Then the idea was also to, have a strong business case behind it, not just, collection of this fan coin by the user base. What are they going to do with it? So we partnered with several merchants based in the UK. So first merchant has gone live last month, which is Fanatics. Fanatics is one of the biggest merchandise supplier to majority of the clubs like Man United, Barcelona, PSG, Liverpool, Chelsea. So I think around 14 of the top 20 football clubs here, they supply merchandise to them. And users can redeem their fan coin holdings against buying various different products. Like if you want to buy a Man United jersey, you can buy using fan coin, you'll get some cash back depending upon various different things. Now, what's happening is that we are launching our fan coin on an exchange. We waited long, actually. We were waiting for the regulations to kick in the UK. But then finally, when the whole Rishi Sunak resigning and the whole circus that we had in last couple of months, we said, okay, let's move on. Let's get the regulatory analysis done. And let's launch it, because we were ready for over a year or so with our fan coin. It's there already on blockchain, or our NFTs are there on blockchain. So everything is up and running and ready. So why to hold on? So we did. So in fact, I met one of the legal guys on our WhatsApp group, Gary.
Yep.
So we engaged with him. We asked him to do a thorough legal and regulatory analysis. And in order to honor our regulations here in the UK, we are now launching our fan coin. So we are now doing it in 3 stages. Stage 1 is the private sale. The screen that you see on at the moment that Gary's sharing, that's for our community and our stakeholders and our existing investors, where fan coin is priced at 1 pence each, and there is a bulk discount on buying in various labs. Then the second stage is it is going on an IEO done by an exchange that we are partnered with. So they are going to do everything. They're based in Spain, and then it will be listed on the exchange on 25th of November. So that's a long story, actually. There's a lot to talk. Yeah. So but that's what we do. We are a Web3 app for football, and so far so good. But it's a marathon. All we are trying to do is we are taking examples from stock markets. Back your tokens, back your coins with a strong business case, rather than having some dog coins or meme coins and those things. So back it with a strong business case. There are another 200 partners who are joining us, where you will be able to get discounts from products like Apple. You can buy a fan coin. You can buy an iPhone using fan coin with a discount. You can buy Costa Coffee. You can buy Morrison's, Nike, Adidas, Virgin Holidays. So you name it, it's there in those list of 200 brands.
So we'll probably leave it on there so everyone can chat back. So that's
Sorry.
But it's really, really good. And I was impressed that Amit and I met at the Crypto AM summer party, I think it was called, or 4th birthday party. And I was so impressed. And yet, Yazzie has made a comment here about the pandemic was the best time to launch a product. But not just that, it was the very fact that you managed to engage with such a large community so quickly at such a difficult time, I think it's a major achievement. So thanks for sharing that, Amit. And for anyone who's watching it, they can check on that afterwards. Eric, you're going to say something about the stuff that you're working on, weren't you?
Yeah, we're well, I guess I should probably introduce the concept to begin with, and then I can talk a little bit about what we're about our progress, because it's been really amazing progress. We have a essentially a discount token. So I think that there's a there's incredible value that's been brought to the world by Bitcoin. Bitcoin solved the problem of how to create contentiousness on the internet, which is really the core component of value, right, and therefore of money. So, but the argument that I've made for some time is, if I want to buy a cup of coffee, well, I can pay for that in dollars, or I can pay for it in a credit card. There's a million ways to pay, payment rails. Do I want to spend my Bitcoin, right? Well, on the one hand, given the incredible potential, upward potential of Bitcoin, the answer is no, right? That the first guy who did a commercial transaction with Bitcoin, who was so excited to be able to pay for something with Bitcoin, bought a pizza for 10,000 Bitcoins. And so that pizza is now worth $200 million. So clearly, paying for things in Bitcoin is a mistake. And I think the same argument can be made of any asset that has a lot of upward potential. You just want to buy it and hold it. But beyond that, even if Bitcoin were like a stable coin, there's no great incentive for me to go to all this trouble to actually acquire Bitcoin so I can just pay for it when I can pay for it with a credit card. So I think that crypto, the ability to be able to send money anywhere to anyone anywhere on the planet in 0.3 seconds, and have a guarantee that money arrives there, and have none of the impediments of the existing banking system, where they ask a million questions, and there's intermediate banks, and there's fees, and there's delays and mistakes and all this kind of stuff. Those are all really great values, but there isn't a really great incentive for people to use it for commercial purposes. And that's what VOW does. VOW is not really a technological innovation, it's a financial innovation. And what it does at the core of it is it realigns the interests of two participants in a transaction. So traditionally, if I'm buying something, I always want the lower price. If you're selling something, you always want a higher price. And so we have to haggle, and we have this contention between us, right? If we can't see eye to eye on the price, then there is no transaction, and that brings liquidity issues. What VOW does is it makes the price irrelevant in a transaction. So I'll explain it from a very mercantilist perspective. Let's say you walk into a shoe store and you say, well, that's, that pair of shoes that I want is $100. Except that I don't really want to pay $100. Maybe I don't have it, or I just think it's overpriced or whatever. So if the market as a whole, on the aggregate, reaches that conclusion and they're not willing to buy those shoes at $100, the merchant has one of two options. Either they can just toss the shoes in the garbage, in the rubbish bin, or they can discount them. They can say, well, we wanted $100 for these things, but we have a margin of $20, so our cost is 80. So we'll try to sell them for 90, see if we find any takers, right? So and this discount comes in a number of different forms. Sometimes they're called loyalty rewards points, as in the case of the airlines and the hotels. Sometimes they're called rebates, as in the case of manufacturers. Sometimes they're called cash outs or discounts or whatever, right? But it really amounts to the same thing. You wanted a certain price for them and you couldn't get it. So you had to take it on the chin and lower your expectations and come in with lesser revenue. And the problem with lesser revenue is that your stock prices fall, right? There's a PE ratio that says for every dollar that you earn, you get $20 in market valuation. and you are discounting your stuff and your earnings per share are just falling and your stock is crashing, right? It's a terrible place to be. But they write it off as marketing costs or whatever, right? But there's a bottom line, which is you can, if you had a $20 profit or $20 margin, you can let go of $10 of profit. You still have $10, it's still good, right? But when the market falls below your cost, now you're really screwed, because now you have to get rid of those things which cost you $80, and you have to sell them for less than that. And now you start losing money, and that's really painful. So with VOW, what happens is the person walks into the store, the price is $100, but the retailer says, but today we have this special, right? We're discounting these shoes down to $70. So we get 30% off. And the consumer says, well, at $70, yeah, I'll buy a pair of shoes, no problem. But what happens is they pay $100. They put out their credit card, they get charged $100, and then they receive $30 V in return. So the customer says, okay, it sounds like $1, but is it $1, right? It's a thing in my wallet, right? And the answer is, well, they can leave the shoe store and walk into a coffee store and then use the V to pay for a cup of coffee, right? The coffee store is going to honor the V at face value. So to the consumer, the net effect is that they got the shoes for $70 because they have $30 in their pocket, which they can spend at Amazon or at anywhere else. And now they're really happy. But the merchant is super happy because they got $100 of income and they issued these 30 V, which didn't cost them anything, right? So how does it work, you say? Well, when the merchant joins the network, what they do is they buy VOW, which is a fixed supply token, just like Bitcoin, and they stake it in order to produce the V. So if I take $100 of VOW and I stake them into the smart contract, it automatically issues 500 V. But those V don't get handed to the merchant. They get handed to the merchant's customers as they do business with the merchant. So we are basically a proof of transaction network. We issue these V upon proof that there were real goods changing hands in the real world. So our tokens represent actual demand dynamics. So these customers then, they go away and they hold on to their V, and eventually they come back to the merchant and say, you know, I earned all these tokens from Starbucks, and now I want to buy a pair of shoes. And the merchant says, well, I issued 500 V, and when I did, I promised to take them back. That is the entirety of the relationship. If I issue V, I vow to take them back. So here's a customer that's got $100, and they're the first did I lose you guys? There's a right. So there's the $100 coming in the door, and the merchant then asks himself, well, what can I do with these returning V, right? And there are a number of answers. One of them is they could burn them, and if they burn them, two things happen. Let's say that they take back all $500 that they issued and they burn them. What happens is that they unstake their VOW, and meanwhile, VOW has gone up in price. So let's just say that they bought VOW at $100 at $1 a token, and in the time that these tokens were issued and came back, VOW went up to $2 a token. So what happens is they take these 500 V, they burn them and they release the VOW, and now they can restake the VOW at twice the valuation and issue 1,000 V of discounts instead, right? So that seems like an amazing dynamic in itself, but the problem is that they did take a hit on the price because they've burnt the tokens. They don't actually have to do that. They could take the tokens and convert them on our secondary markets for real cash. So if they have costs that they have to pay vendors or stuff like that, those vendors aren't going to take V-dollars, let's say, then they can take their V-dollars, burn them for, or sell them for actual banked money, and then pay their vendors. Eventually, the vendors will accept V-dollars, and so then V-dollars become just like money, right? You receive a V-dollar, and you use it to pay your vendors, and everything's hunky-dory because now it didn't cost you anything, right? So what VOW does, in essence, is it decentralizes monetary issuance. Right now, we have a situation where, like some of the people in this channel, they've created their own token, and they've got these sort of use cases around the token and little community. But that's a one-off situation. There's many one-off situations, but they're all sort of specific use case issuances. What we're doing is we're just creating a standard for monetary issuance, which is done in a unit of account that everybody understands. So when we issue, when our customers, the merchants, issue money, that's essentially a corporate currency, right? But the thing is this, because they're issued in a token that is sort of presumptively pegged, but it isn't actually, but that is redeemed at face value for the local currency, then you remove the cognitive load. Nobody thinks about what is this token worth, right? The big problem with loyalty rewards points, for example, American Express, right? We have 200,000 tokens of American Express and points. And the big question is, well, what are they worth? And the answer is, well, I don't know. I mean, actually, it depends. If I spend them with American Express, they're worth this much. If I spend them with affiliates, I get a little bit less. If I want physical cash for them, I get half the value, right? So they tier it. And then, of course, the points expire. And I have to manage them. I have to go and log into the American Express website. Somewhere in that mess of a page, I can manage my points. Or maybe it's the Delta, because I have a partnership with Delta. So I actually have to, the user experience around loyalty points is horrendous. So what VOW does is, and of course, I can't spend my American Airlines points on Delta, right? Ever, because the two have really zero interest in collaborating with each other that way. So if VOW does nothing else, what it does do is it unifies these huge pools. It's $5 billion, I think, it's probably a larger number, but it's a huge amount of money that is out there with this horrendous user experience, and all sort of isolated in separate pools, right? VOW comes in and unifies it all, and therefore creates liquidity for all this stuff.
And that's probably the thing. Sorry, Eric, I may have to cut you a little bit short on that because we're getting a little bit tight on time. But it is a really important thing to remember with loyalty points. I think it's recognized that currently one of the world's largest banks that isn't a bank is Starbucks. Because if you work out the valuation of how much people have put either through loyalty points or by putting money on their card, Starbucks has got some of the highest amounts on its files type thing. So really interesting. Eric,
Amazon have started that, Gary.
What was that? Sorry.
Amazon have started that now. So you can do like a top up. So they're going to be exactly like Starbucks.
Exactly. And I think there's going to be a big growth in there. And I keep saying to people, I used to be old fashioned. I used to be involved in the loyalty card scheme years and years ago. And the whole idea of loyalty cards is not loyalty. It's about data collection and that kind of thing. And it's about preventing you from going elsewhere. So the idea of you being able to cross-spend your Delta points with British Airways, vice versa, is kind of anathema. But we'll move on from that. We've only got a few minutes left, really. And I wanted to quickly, I noticed that we've just had Martin's joined us, and also we had someone else on who may have actually given up. I was about to invite Kazir on because he had sort of something on his profile which suggested he was involved in token. With it being the last few minutes, or the last 10 minutes, I was going to open this up and say to anybody, have you come along tonight with any particular question that you'd like answering, or anything that you're really keen to share? We've heard from Eric, we've heard from Amit. both really interesting project areas. Definitely check out on. Martin, you've just put your camera on. You want to say hi? And do we get to say, Martin, you're off mute? No, he's waving. That's cheating. That means we don't even get to say that you're on mute. Yeah. Usually I try and wrap these up on the hour. So we've got 7 minutes. I don't do sign language. Sorry,
yeah,
Martin.
me neither. Just didn't want to disrupt your flow. Yeah, I don't know what you were talking about. Just joined in, so I don't know.
No problem. We're just open. It was general chat.
My question is,
yep.
Are you aware of the CBDC, the central bank digital currencies?
For which country?
Right now, I think it's just like somewhere like Bermuda or something.
So there's loads of them. The UK, the Bank of England's doing a load of work on stuff. China is live with the EUAN, which is based off what was called DCEP, which is the Chinese project where you pay for things using WeChat, and they've rolled that out to, I think it's 200 million users now. I think Bermuda's got a CBDC. There's loads of countries about to go live with CBDCs. Sweden was one of the most advanced ones with the e-Corona. They actually pulled that back by 2 years. So yeah, so CBDCs, a topic in its own right.
My concern is that there's been a more than a decade pioneering the technology, and now that it's proved the concept, the central bank essentially, I don't know who's exactly behind it, but they're taking the concept and they're saying the difference between the traditional crypto is that and the CBDC is that the CBDC is issued by the central bank. Therefore, it gives people a lot more trust. I'm not happy about it completely how it's going, like literally, but maybe it's good, maybe not. I don't know. You don't need to answer it, but I feel personally that kind of puts the other coins into shadow. And personally, I wanted to see coins like Ethereum succeed. You know, now we have like thousands of coins out there, millions of money pumped into it. Crazy.
So the key thing to remember is certainly from all of the CBDC initiatives I've seen to date, none of them are cryptocurrencies. They are all digital currencies in some way with a centralized system of management. So the Bank of England, I've been on a few of the calls with them, and what they've said is that the research that they are doing is that it will be a centralized digital currency that may use some of the features and attributes that digital distributed ledgers and blockchains use. So the feature of it being programmable, which the Chinese one hit the news a year ago, April of last year, when China acknowledged that they were doing some research into CBDCs that have an expiry date on them. So effectively, you were getting paid and then had to spend it by a certain date. The critical thing to remember is central bank digital currencies, they are digital currencies, they're not cryptocurrencies, so they're not blockchain based, they're not decentralized. By the very nature of a central bank, they are centralized. The one possible exception on that is the EU is doing some work on a central bank digital currency that the EU would run. So that would be multi-central banks, because each country's got its own central bank still, even though they're harmonizing on their fiscal policies. So I've spoken to the central bank of a former Eastern Europe country who wanted to learn about crypto because they were looking at a fallback option. And I said to them, well, you use the euro, don't you? And they said, at the moment we do, but we're looking at options for the future. So there's a lot of work going on in this space. So don't panic yet, Martin. But the market for cryptocurrencies and the market for central bank digital currencies is different. The nature of it, the US dollar is currently the world's reserve currency. That doesn't stop people from having pounds, euros, cents, all this kind of thing. And I think it'll be the same in the future. You will have CBDCs. The UAE last year, they did a great project using a CBDC to do inter-country bank transfers between Abu Dhabi, Dubai, Saudi Arabia, and a couple of other places, where they used a central bank digital currency to do the inter-country settlements, but they're still using the dirham elsewhere. So
So
Sorry,
thanks for the answer, because just a quick one. I'm really happy to hear that, because what they're trying to do is showing something like, look, CBDC is legit, issued by the government. Forget about crypto. So now because I haven't time to research it fully, and that gives me much better option to just say, look, CBDC is not a cryptocurrency, period. I don't go further into it. Thanks so much. Sorry about that.
Well, so I think we also have to keep in mind that the implementation or rollout of CBDCs is equivalent to the destruction of physical cash, right? And this has been a great goal of the New World Order, because when you lower interest rates below zero, when you actually start charging people for putting money in the bank, what they do is they go and take it out, and they can take it out in cash, right? But if you destroy cash, if physical cash doesn't exist anymore and you can't take it out of the bank and put it in under the mattress, now you just have to pay the negative interest rate. You have to actually pay them to keep your money in the bank, which is really what they want, right?
Just a quick one to really throw the pebble, which is actually a brick, into the pond and cause a load of waves, for people to go away and research on that a little bit further. When you put your money into a bank, it ceases to be your money. Okay, and this is a thing that people always give me the crazy man look when I say that. But
no, it's true. It's a loan to the bank.
Correct. And so it's an unsecured loan. So this is why things like Financial Services Compensation Scheme in the UK exists. In the USA, they've got an insurance policy that's against it, because
FDIC.
FDIC, that's right. Because if bank goes bankrupt, then you become an unsecured creditor. It's not your money. So Nicola's looking really worried now.
Yeah.
No, and I do find that one of the things I love is the more I learned about crypto, the more I learned about the traditional banking system, and the more I realized how little I understood it. So there's a closing thing for everybody. We're out of time, I'm afraid, so I'm going to have to close it off on that.
Yeah, before we go away, I have an interesting picture that I always use in various presentations that I give. If you can allow me to share that for a minute.
Very briefly, you've got seconds.
30 seconds, 30 seconds probably.
But no, it's not going to be shareable though. That's going to be the problem, because I don't have that switched on for this session. So,
okay.
Hold it for another day, Amit. We'll bring that in.
We'll do it next Sunday then. Yeah,
absolutely.
But you can post it on the channel.
Oh yeah.
Yeah, I can do that.
On the channel, right?
And if it does that, I notice Fancoin, we've got a link to that as well. So do take a look at that. So fancoinapp.com. We've got, Eric, what was the website for yours again? It was Valcurrency.
Valcurrency.com.
Yeah. So thank you for sharing that.
I'll post it on the channel, and I'll share my my speech in Frankfurt as well.
Brilliant.
So I can't share an image in this chat. I can only send a text. So it's an image on my folder. Don't worry, I'll share it next time.
Amit, that's a reason to come back next week. So
whenever I have time, it's a good time. Usually Sunday evening, I'll try to join as much as I can.
Okay, I'm going to call a time out there. Thank everyone for joining us today. Thank you very much for your comments, your contributions, your questions, even for those who stayed silent. And for those who are watching the recording afterwards, thanks very much. And click on the subscribe, like, and see you next week, folks.
Thank you, everyone.
Have a great
Thanks so much, everyone.
See you next week.
Bye.
Bye.